Good morning. Welcome to the Morning Blast. It is Monday, the 12th of January. You join myself and Michael Brown for a very candid, usually expletive-filled look at what happened, as it's Monday, look over what happened in the weekend and Friday. Obviously, it's non-finals on Friday. A few things happened over the weekend as well, which would be good. And as it's a Monday, we also not just looking forward to today, what to expect, but also a little bit of a glimpse into the week ahead. Michael, how are you? Welcome back.
Well, hello, Ryan. Hello, everyone. To do something I never thought I'd do, I'm going to start the Morning Blast this morning by quoting former House Speaker Nancy Pelosi, because there is no point in saying good morning this morning, because it is certainly not one from the perspective of financial markets, market participants, or those who believe in independent central banking, given what we've seen happen over the last sort of 12 hours.
Quite. Without giving the game away too much, because this will be the number one topic we talk of. Yeah, I'm sure we're all, I'm sure we're all aware of what's happened, right? Trump has, basically, and the fact that it stayed quiet all this time as well, I'm quite surprised about. On Friday, the DOJ served a grand jury subpoena to, the Fed, basically.
Yes, exactly. And not only that, but of course also threatening the Fed and various officials, including Chair Powell, with potential criminal charges, depending on how this investigation progresses. And obviously we'll cover that in some depth in a few minutes' time. But yes, safe to say I'm calling it a feud between Trump and Powell. It's sort of a one-way feud, to be honest with you. But it is certainly escalating. And if anyone hasn't seen the video statement that Chair Powell put out, about mid-time London time, but Sunday evening in the United States, then do go and watch it. It's only 2 minutes long. It is a very, very powerful statement. Watch it after the Morning Blast. Don't leave us. But it is very well worth 2 minutes of your time, because it shows up exactly what's going on. And it's also very pleasing to see someone standing up to Trump's bullying efforts.
Yeah, quite. But like you said, I have given it a repost. Also, we have been trialing our new little situation report PDFs, which I put out one of those for the first one, in fact, to give it, I thought this would be a good trial balloon. So that's gone out this morning and early hours of this morning. Just a bit of a rundown. But anyway, as you said, we'll come on to that very momentarily. What else apart from that happened on Friday?
Yeah, well, I mean, I was going to say it was actually a fairly positive end to the week for markets. We had the S&P closing up by 0.7%, north of 7,000 in the futures complex once more. The Nasdaq up by 1% or so. The S&P closing Friday at an all-time high in the aftermath of the jobs report, which we'll discuss in a short while. But ultimately, I would argue Friday was a bit of a damp squib, really. We started the day expecting to learn something new from the December payrolls report, which frankly we didn't, and we'll discuss that in a little while. We were also, obviously we'd all sort of convinced ourselves that we were going to be getting a Supreme Court ruling in the IEEPA tariff case, and that didn't happen. The Supreme Court didn't actually issue a ruling in that case. It was a very complicated and legally obtuse criminal case that they actually ruled on Friday. They have set Wednesday, the 14th of January, as the next date for rulings to be announced. But again, remember that the Supreme Court do not announce which cases they're going to be ruling on. They just tell us we will issue some rulings on this date. So it could come Wednesday. It could come even later than that. Again, everyone's going to sort of whip themselves up into a frenzy and then potentially be disappointed. Just in terms of other headlines from Friday, in terms of things that we won't discuss in a short while. Late on Friday, President Trump on Truth Social was out calling for a 1 year cap on credit card interest rates at 10%. Now, Trump didn't provide any further details on this, except for saying that he wants this cap to be effective for 12 months from the 20th of January. He didn't say whether he's going to be enforcing this by some sort of executive order, whether it's going to come via congressional action, or whether it's just going to be basically a pressure campaign from the president towards the credit card companies and the banks. It's also very unclear as to whether the credit card companies are going to respond. However, I would argue that the pretty obvious response would be, if they are going to introduce this cap on credit card interest rates, the obvious response would be they're going to extend a hell of a lot less credit particularly to those borrowers who are less creditworthy, or in other words, on lower incomes. So this could very much be an example of the administration shooting themselves in the foot if that were to come to pass. You would potentially expect a bit of downside in banking stocks at the open today, given that the news came after Friday's close. And in fact, Barclays here in London have opened down by about 3 to 4% this morning. So you could see a similar move on Wall Street later on. And lastly, before we move on to our debate momentarily, there were reports in Japanese media on Friday that PM Takaichi is considering dissolving the lower house and potentially calling elections as soon as early or mid-February. Now, this comes on the back of Takaichi's, basically the case is Takaichi's approval rating is incredibly high at this moment in time. The thinking goes that there's only one way that approval rating is likely to go, and that is lower. So effectively, she may as well strike while the iron is hot. Of course, the LDP don't have a majority in the lower house at the moment. Takaichi wants a majority in order to make it much easier to pass her budget and such like. The one sort of word of caution I would have with this is that while the reporting has been relatively widespread, the Japanese press haven't been particularly great with their political scoops over the last year or so. You'll recall, of course, that we had this big excitement and frenzy over sources stories last July that PM Ishiba, as it was at the time, was considering resigning. He actually didn't go until late autumn. So although they got it right eventually, do bear in mind that this is yet to be officially confirmed, but it did nonetheless cause a bit of a wobble in the yen as the week drew to a close. Dollar yen trading up to 1-year highs north of the 158 mark, although the pressure that we've seen on the greenback has obviously seen most of that evaporate as the new trading week has
and I remember certain market brackets traders, but that's very much air quotes, telling us that we'd never see highs like this again in the yen. But there we go.
Well, also for those people who said, next time we print 158, they're guaranteed to intervene. It's not about the level of spot dollar yen. It's about the speed of any move and the volatility that we see.
Yeah, exactly.
Worth bearing that in mind.
It's not much how, what's the word? It's more the motion of the ocean more than anything else. It's how quickly the tide comes in, not how high it comes in.
Yes, there we go.
There you go. That's a little analogy for you. But considering I feel like absolute death, I'm quite proud of that one.
Is that due to illness or an overindulgent weekend?
No, this is just me not being able to shift whatever shit I've got.
Right.
Might be the bad AIDS. I don't know. Let's see.
Hang on. Is there a good AIDS?
Well, I didn't. Well, let's not go down that road. But also, I didn't think you could catch it twice, but I appear to have gone.
Oh, no.
Anyway, moving swiftly on. I'll tell you what, before we have a bit of a dive into before we have a dive into Powell, let's have a quick overview of the quick summary of what happened actually in the NFP. So obviously, for those unaware, if you are unaware, I actually salute you. So you're the kind of trader that I am. Obviously, NFP came in at 50,000, positive 50,000. Versus expected of 60,000, so 10 below there. But also, as I'm always a big fan of, the revisions, 2-month net revisions, courtesy of Michael Brown on Friday when I messaged him from the pub, perhaps.
I wasn't in the pub, I was at my desk.
October was minus 106, and it got revised down to negative 173. So that was a 68K knock on the head on that one. And November got knocked down from 64K to 56K. So we had the headline coming in 10K under, and also revisions, another 76K knocked off what the initial prints were. So all in all, not great employment numbers.
No, not particularly great, but actually I would say that the labour market report was a bit of a mixed bag, in all honesty, because
it always is.
Well, exactly. Well, yeah, we'll set that to one side for a moment. As you said, headline payrolls rising by 50,000 on the month, which is okay-ish at a push. But then if you dig into the household survey, unemployment actually fell to 4.4%, and that was down from a previous figure of 4.5%, which was downwardly revised by 0.1%. So now I'm gonna make the assumption here that the Fed are operating on normal principles of how you would set monetary policy. Let's just get that out there very, very quickly, because you did see quite a significant pairing of bets on a January rate cut, down from about 20% to I think we're about 3% chance of that move this morning. And that's largely because of that stabilization that you're starting to see in the unemployment rate. Now, my sort of concern with this is twofold. I think the Fed are potentially going to be almost falsely reassured by where unemployment is at this moment in time. Obviously, they've got bigger fish to fry.
Yeah, right.
But the first reason for that is because the only reason that unemployment actually fell between November and December was because people left the labour force, not because people got jobs. What I mean by that is, effectively, unemployment came down because people threw in the towel and went, actually, sorry, I'm not looking for a job anymore, which is not a particularly great sign.
And if I may quickly, again, this comes into the nuances of how like these surveys and stuff are broken down. Like we did a big piece last week on this where, I guarantee most people didn't realise that how this survey is put together. And, not only that, but the surveys themselves, it's not about, it's not about if you're unemployed, it's about if you're looking for a job. And like you said, if you're no longer looking for a job, you don't register as you don't register on the BLS report anymore. Also, I'm glad you noticed. Sorry, not glad you noticed because obviously you're already aware.
Yeah,
sorry. I apologise for that. I'm glad you highlighted. I really am husky today. If anyone wants to send me like sexy phone calls, give me a call today.
Ooh.
Oh, was that oh God or an oh?
No, it was not.
Okay, right. Just I'll give you a call if you want, mate. You know that. But I'm glad you've we're digressing fast and it's already Monday. I'm glad you highlighted the establishment survey versus the household survey. Obviously, establishment survey is payrolls and then household survey is unemployment. Now, the reason why sometimes you see people going, oh, well, I can't understand how NFP was shit, but the employment data didn't move and stuff. Because they're two completely different surveys.
Yeah.
And the methodology is completely different. They survey different people, different samples, and they're just completely made up differently. So I'm not going to say anyone that doesn't know this is stupid because quite frankly, for the first God knows how many years being in markets, I didn't know they were different. But, these things are really critical to understand. And it's the lack of education that's out there for people to understand this because, you've seen it before, right? We'll get a really positive or really negative NFP report headline, but then unemployment will tick down, which doesn't make any sense at all. And and that's where people start going, oh, this is proof the data's fake and all this. So they're just making the numbers up. No, they're not. They're not. But it's just, you're just getting two completely different surveys based on two different sample criteria and different people just released at the same time that both relate to jobs. And but they are completely separate entities. These two reports do not talk to each other. They do not need to be merged together to come out with zero.
No, absolutely. And they never will, hopefully. No. And I think it's very important to understand the data that you're looking at.
Yes. It does help.
You don't need to go into PhD level, but just understand what does the unemployment rate actually mean? It's 4.4, 4.5, 4.6%, but 4.6% of what is the important thing to understand. And, when there's a quiet day and there's not a lot going on, next Monday, for example, it's Martin Luther King Jr. Day. The US will be closed. Spend a bit of time just going through that sort of thing and understanding what's going on.
People probably noticed I've gotten into writing little reports and little blogs and little primers and stuff. I might do one on this.
Well, there we go. That's Ryan's job for the day. The other thing I just wanted to note in terms of the jobs report before we get on to what's going on
the big bit
Fed is, yes, non-farm payrolls headline rose by 50,000 in the month of December. However, and pretty much all of that was private payrolls, by the way, because obviously there's a federal hiring freeze at this moment in time. Pretty much all of that headline figure, again, came from the healthcare sector, which added 39,000 jobs in the month of December. Now, I put this out on the internet, on Twitter on Saturday, and probably the first question I got asked was, oh, well, you can't just exclude sectors at random. I agree. However, the reason why it is insightful, for want of a better word, or can be insightful to remove the healthcare sector from the overall employment data is because firstly, it's non-cyclical, i.e. healthcare hiring does not change depending on how the economy is doing. People get ill whether the economy is booming or whether we're in recession. People get old whether the economy is booming or whether we're in recession. The second reason to focus on it is, or to exclude it, I should say, is because it's very domestically focused. Again, the vast majority of healthcare jobs in hospitals and doctors and nurses and whatever are treating people in the US healthcare system. They're not necessarily exposed to shifts in the global economy. And the third reason, again, sort of in keeping with this, is it's not an interest rate sensitive sector. Again, the age of the population, the state and the health of the population does not is not determined by whether the Fed funds rate is at 1 or is at 5. So with that said, if you take healthcare out of the private payrolls figure, private payrolls excluding healthcare have actually been negative in every month bar one since May of last year. So essentially the message from that is if the US population was not getting older, then the US economy would not be adding any jobs whatsoever. And I think that's something that's gone under the radar a little bit because everyone sort of looked at and went, 50K on the headline NFP, that's not too bad. We can all sort of say, it's sort of bumbling along, it's okay. But actually under the surface, I think the message is that the labour market is considerably more fragile than that headline payrolls print would imply. And when you take that and the stabilisation in the unemployment rate for quote unquote the wrong reasons, I just worry whether potentially the Fed and markets are being almost falsely reassured by the data that we got at the back end of last week.
Quite, but just, so again, Michael has summed it up perfectly there as per usual, hat off to the big man. But like you said, I would go one further and say it's not just people getting hired to look after old people, although that's a significant aspect, but it's also, the way the US has been going for many years now, it's all about administrators and, there's a huge industry now just all related to health insurance, pharmacology and pharmaceuticals and stuff like that. You only need to be, obviously me and Michael based in the UK, but I appreciate that you guys in America that listen to this already know this, but I'm always blown away by, I spend 2 minutes in the US and already I'm being bombarded by advertisements for conditions and diseases I didn't know existed. They've gone from a manufacturing powerhouse to a healthcare powerhouse, and these are obviously unproductive jobs. You're not making anything to sell. You're just looking after people. You're looking after people that are unproductive themselves as well. So it's doubly bad. But
slightly harsh on the sick and the needy to just label them as unproductive, but I do understand where you're coming from.
I'm feeling very sick and needy at the moment. I'm still being productive. So take yourself out of bed, you lazy. Anyway, sorry. I'll take it back. But anyway, look, we've got 10 minutes, so let's move on to the big story, which was I don't know if Michael can run over, but we might run over to something. Michael might want to give us a bit of a re-up.
No, I've got time, don't worry.
Okay, perfect. Obviously, so just the core story here overnight and what has been impacting markets. Friday, the Department of Justice served a grand jury subpoena to the Fed, to Powell. And then last night, early hours of the morning, I woke up to go for a pee and I see a video from Governor Powell, Fed Chair Powell. And I'll be honest, Michael, I thought it was AI at first. I was like, there's no way this is true. But the basic, before Michael cracks in, ostensibly, Powell's Senate testimony it was about the testimony on the $2.5 billion HQ renovation. Powell released an extraordinary video statement Sunday night calling it a pretext for this. His exact words were, the threat of criminal charges is a consequence of the Federal Reserve setting interest rates based on our best assessment of what will serve the public rather than following the preferences of the president. This is the first time in the Fed's 112-year history a chair is accused of administration of using criminal law to pressure rates. It is unprecedented. And as Michael and I agree on, Powell's been notoriously restrained so far in all of this, what's going on. He's ignored the personal insults such as numbskull and dumb guy and obvious Trump hater. But fair play to Powell. He seems to have gone, do you know what? I'm now got to go public and tell people exactly what is going on.
Yeah, absolutely. And I think, as I said earlier on, I think the statement, the video that Powell issued is a very, very powerful one. And he hits the nail on the head. This is not... If anyone seriously believes that this is to do with, renovations to the Fed's office building, which incidentally started about a decade ago when Janet Yellen was still chair, then I have many, many bridges to sell you.
Well, just on that, just quickly, so people wondering about that. So let's try and get the facts out whilst we're talking about them. So the Fed renovation cost at the moment is being pinned at $2.5 billion, right? And it's not just one building, it's many buildings. Trump is claiming it's $4.1 billion. But again, where he's getting that number from, nobody knows. But that's we all know this is not the real reason. But there you go. That's what is over at the moment officially.
Yeah, absolutely. And I think the reason that obviously I haven't got an insider at the Fed. I wish I did, but I would imagine that the reason why Powell has sort of come out swinging now, because you may well say, well, he's kind of just taking it on the chin. Why now? Well, this is a dramatic escalation. This is not President Trump putting out a tweet saying this guy's a muppet. This isn't Trump standing in the Oval Office going, I want rates to be 1%. You take this 3 or 4 steps forward and it could result in criminal charges, a potential conviction, and people being thrown in prison. That is, literally how serious this could potentially be. And make no mistake, it is politically motivated. It is, for want of a better word, a complete and utter sham. And it is the latest attempt from the administration to try and pressure the Fed and to pressure Powell into doing what they want them to do, which is, of course, lowering interest rates. Now, safe to say that is not going to work. I don't think anyone on the board of governors at the Fed or any of the regional Fed presidents are going to be doing anything differently in terms of their monetary policy settings based on these subpoenas and this threat of criminal charges. But it is simply the Trump administration, again, resorting to these sort of bullying tactics, which they use on a number of occasions. And actually, it is very reassuring as a market participant, and I would imagine as just a member of the public, to finally see someone stand up and not just say yes sir, no sir, but actually say, Joe, these are the facts. You are completely wrong. I have been given a congressional mandate to do the job I'm doing, and I'm going to carry on doing it. And I think, fair play to Chair Powell for doing
well. And also, speaking of fair play to Republican Senator Tom Tillis, who has come out the trap straight away and said, to quote, I'll quote him directly here, if there were any remaining doubt whatsoever, if there were any remaining doubt whether advisors within the Trump administration are actively pushing to end the independence of the Federal Reserve, there should now be none. And he's come out and said he's now going to block any Fed chair nominee from Trump until this is all rectified or at least all settled.
And that's important because I was just going to come on to the sort of implications of all of this, because for those who are unaware, Tom Tillis sits on the Senate Banking Committee. He is also a Republican senator who have not exactly been vocal in being against Trump over the last year or so. So for him to come out and say that actually really does complicate the process of nominating the next Fed chair, and also potentially nominating other members to the Fed board, because of course you've got this ongoing Supreme Court case around whether or not Trump can dismiss Governor Lisa Cook. You've also got the question of, obviously, Chair Powell's term as chair is up in mid-May, but his term as a governor runs until 2028. So does he now stay? I would argue that actually this probably increases the chances that he kicks around for a little while longer. And I'd also argue that it increases the chances that the Supreme Court will rule in Lisa Cook's favour, because the administration have now shown that actually, whether it be allegations of mortgage fraud or, goings on in terms of building restoration, the real reason is this is politically motivated. You're not doing my bidding and I want you out.
Yeah, well, no, quite. So like the political arithmetic, please tell me I've not got this wrong, but I believe this is correct. So the GOP majority on Banking Committee was 2 seats, but obviously Tillis's defection now is going to block nominees. Also, just things to be aware of as well. Obviously, Stephen Mirren, big fan of PIQ, top lad. His term expires in January, 31st. So that's another one that we got to kind of fill a gap for. But yeah, there's just a lot of moving parts all of a sudden. And, like you said, I guess it is quite reassuring to see that Powell, etc., aren't taking this lying down for once. And I don't know about you, but, and again, this is completely reading from the lines. Unfortunately, myself and Michael do not have inside lines, as Michael said just now.
If you are an inside line at the Fed and you are listening to the Morning Blast, then do give me a call.
I'll happily buy you a few beers. But yeah, I think it does seem like the way he kind of came out, how Powell came out and did this video makes me feel like he's now going to dig his heels in. And if there was a chance of a cut in the next, the FOMC meeting, which is 27th, 28th of Jan, there isn't going to be anyone. There's not going to be a chance now, because the thing is, he can't be seen to be cutting now with this behind him.
And I think actually that's an important point, because we said a moment ago the jobs report has pretty much killed the chance of January cut anyway.
Yeah.
But I think this is where this all becomes very counterintuitive from the Trump administration's point of view. When the stated aim is get interest rates lower, well, one, the Fed now almost cannot lower interest rates, or the bar for a rate cut is orders of magnitude higher than it otherwise would have been, because they can't be seen to simply just acquiesce to whatever the administration wants. And the second thing is, and again, this is very anecdotal, but if you look at Twitter or some of the Bloomberg or WhatsApp chats that are going around this morning, the only person who I have seen in probably hundreds, if not thousands of comments that are supportive of Powell, the only person who I can see that's actually in favour of what Trump is doing is Mohammed El-Arian. And I would imagine that's because he still thinks he's got a long shot job at getting the Fed chair gig. Everyone else is very and rightly unified in calling this out for what it is and standing firmly behind and with Jay Powell and going, this is not a path that anyone wants to be going down. Let's make sure that we don't go down it. So I think Trump has overplayed his hand quite considerably.
I've got to say, there's been chatter for a couple of years even, of Mo going a bit bizarre, because I used to think he was a really good person.
He's lost it, I think.
But do you know what I mean? He used to be seen as someone, a smart guy in the room. He'd always quite salient points, seemed to always be quite neutral. But the last couple of years, I'm not going to say it's all because of the FT, but it has tied in since he's been working at the FT. Just put two and two together, guys. That's what I'm saying. But anyway, I think one thing as well before we, this is going to drag on, so we're going to be talking about this more and more, and we do want to have a look ahead of today and the week ahead. But just before we do sign off on this topic, again, I hope maybe some people have learned a little bit or had a bit of value, or at least seen our view on it, which, take the opposite if you want. But I think why it's really important, anyone saying that, the Fed should just cut rates anyway. The problem is, if the Fed changes policy under this pressure, as we said, the guise of independence is permanently gone under this administration. Now, the problem with that is that if the independence is seen to be absolutely compromised, you're going to get higher yields, weaker dollar, and a capital flight. There's a reason why metals have taken another leg higher. So it's not all sunshine and lollipops with lower rates. And for anyone wondering, or anyone that wasn't completely aware with the gap between what Trump wants and what Trump has, the Fed funds rate now is 3.5%. Trump wants circa 1%. So, that's a lot of cuts. We've only got two priced in for 2026 at the moment?
Yeah, it might just be less than two actually now, slightly, given the jobs report on Friday.
But anyway, so I hope, we hope we added a bit of value.
Just one, actually two last things on that, just before we move on. The first is, and I thank Ryan Littlestone at Forex Flow Live for bringing this to my attention. We all knew, and we kind of already assumed, that whoever succeeds Powell as chair in May is going to be a political puppet and very, very compromised in nature. You've really, even more than we would have done, you've really got to question who is taking that job now in these conditions. Any quote unquote serious macro guy is not going to want to do it.
Do you know what? That's a fantastic point, actually, because, up until basically, it's always a bit suspect, but up until today, up until last night, you could argue that whoever the person taking the role could argue, actually, don't worry about it. I am going to, run my own kind of book here. But like you said, it's very clear now, whoever takes this role after Powell, especially in this current environment, is purely a puppet. Now, that will not stand you in good stead for any credibility for your entire tenure.
No. Well, you won't have any from day one, and you're then fighting a losing battle. And the other thing, as Ryan said, obviously this is going to rumble on for a while. I put out a very quick note on it this morning. Ryan,
a very good note.
An infographic. Thank you, mate. There is plenty of content out there. Do have a read of it, because it is something that is pivotal to be across over the next, I was going to say few days, but probably weeks, maybe months.
No, absolutely. Well, thank you. That was a good chat. But so go on quickly before we sign off. And again, I apologise for overrunning. But what's your thoughts on today and what's going forward this week?
Well, I think today is pretty simple. Obviously, the data docket's relatively light. We do have a couple of treasury auctions, a 3-year sale at 4:30 London, a 10-year sale at 6 London. But I think the momentum that we've seen this morning, which is obviously dollar down, treasuries down, stocks down, metals up, precious metals, of course, I don't really see any sign of that changing as we move through the day today. It's not a day to be fading those moves in my mind. In terms of the week ahead, again, just very briefly, a few things to call out in terms of the calendar. It is quite a busy week of US economic data this week. Tomorrow we get the December CPI report, both headline and core inflation seen at 2.7% on a year-on-year basis to round out 2025. On Wednesday, we get the latest PPI figures. Note, though, that will be the November PPI report, so it is slightly delayed because of the government shutdown. We also get November's retail sales figures on Wednesday as well, with sales seen having risen by 0.4% on the month compared to the stagnation that we saw on or in October, I should say. And then on Friday, we get the latest industrial production stats from the US. Other than that, other notable data releases include Wednesday's Chinese activity and trade figures, and Thursday we get November's GDP figures from the UK, although of course it is monthly data, which is very, very noisy indeed.
Sorry, Michael, just quickly, for the CPI and PPI, I know obviously it's November. Are we getting December's as well as November's?
So we get December CPI.
Yeah.
We get November and October PPI.
Do you know what? As you've said that, I've actually scrolled through what we had. Well, I said we had, what Jamie made up for me. And that's what he said. So I should have just read my own work. I should have read PIQ's own document. Sorry. Well, but the news is PIQ was right.
There we go.
I wasn't, but yeah.
Two other things just focus on this week more broadly. Firstly, it is the start of Q4 earnings season on Wall Street. It feels like about a week since Q3 earnings season ended, but never mind. The banks will be kicking us off. JP Morgan reporting before the open on Tuesday, Wells Fargo, Citi, Bank of America on Wednesday, then Goldman and Morgan Stanley on Thursday. And of course, it is quite a busy week of central bank speakers. We're due to hear today from the Fed's Bostic, Barkin and Williams. I would expect none of them to make any explicit comments on what's going on. In terms of Fed speakers this week, as I said, it is a busy one. The ones to watch are probably Governor Myron, who speaks on Wednesday, and then Governor Bowman, who speaks on Friday, simply because they were nominated to their positions by President Trump. But again, I wouldn't expect them to make any overt comments on
I tell you what, though,
situation.
I tell you what, we talk about people, the smart people in the room and, those that kind of have some credibility wouldn't want the job. I tell you one person who wouldn't care and wouldn't mind being a puppet, Steve Mirren.
Well, he already is, isn't he?
Right.
Also, just bear in mind that the Fed's pre-meeting blackout period comes into effect at close of play on Friday. And last point, by no means least, we are due to hear from Bank of England Governor Bailey this week. He speaks tomorrow. And I guess we'll leave it there this morning.
Oh, and also don't forget,
a lot to chat about.
Don't forget, we got the chance for a Supreme Court tariff decision at some point.
Oh, yeah, on Wednesday, potentially.
Well, any day, let's be honest. No one would be surprised. But Michael, thank you so much. Listeners, we hope you've added a bit of value to your day. Maybe put a smile on your face, whatever you're getting up to. Please keep it tight, stay safe, and we'll see you all tomorrow. Much love.
Indeed. Bye.